short-term insurer Santam released their annual results today for the 12 months ended December 2024. The company reported that group revenue came in at 52.3 billion rand. That's up 12% on the year before, with conventional net earned premiums accounting for a big chunk of that, coming in at 32.2 billion rand. That's up 10% on the year before, while their net underwriting margin grew to 7.6%, up from 3.5% in the year prior. Shareholders are set to get a gross dividend of 9.85 rand a share. Well, to give us a backstory to the numbers, I'm joined by Tava-Ziva Madzinga. He's the CEO at the Santam Group. Thank you very much for joining us, Tava-Ziva. So these appear to be healthy numbers. How much of this is a factor of premiums increasing versus getting more clients on your books? Perhaps you can take us through your various revenue streams and where in particular you saw growth.
Good afternoon, and good afternoon to your viewers, and thank you very much for having us. 2024 has been an operationally challenging year. But what we are finding is that the business has shown, modest growth coming through at the end of 2024 across all the different lines of businesses. Our international portfolio has grown, 2% to 18%, up from 16%. Our partnerships business, again, delivering strong profitability and growth. And then our direct business, particularly through My Way, again, showing, positive growth. And so we've been able to grow both premium and customer count, particularly in that in that business, and maintaining that delicate balancing act between profitability and growth, and ensuring value to our underlying customers and brokers. So I think all in all, a good year for Santam.
So what about the return on the investments that you make in the capital markets? How was the performance there during 2024?
I think the investments we've seen coming through in 2024 have largely been, buoyed pretty much by, what you see in the interest rate environment. Again, a double-edged sword, good for investment income, but high interest rates difficult for our customers. And so with interest rates starting to come down again, positive for customers. I think you've also seen a recovery in, motor vehicle sales again, which is good for customers taking up in insurance. But on the investment side, again, another good year for us, given the amount of investments we make from the premiums that we invest.
So your results reflect a period when we still had high inflation and interest rate levels. Did you experience an increase in customers perhaps stopping paying their premiums, or are people increasingly preferring to rather keep paying their premiums because they understand that if they don't do that, the long-term consequences of not having cover could be quite devastating?
I think we come into a period that's a post-COVID environment, and so the awareness around insurance is certainly a lot more heightened. And we found that despite the difficulty of the environment, people are taking out insurance, for their houses and for their cars. Commercial businesses in particular are protecting their assets. And so what you are seeing is that at an industry level, insurance premium growth has been positive, pretty much counter-cyclically to what's happening in the rest of the economy.
In terms of the costs of coverage, what aspects are fueling increases in insurance premiums? For example, the issue of climate change, for example, how much pressure is that having on increasing premiums?
So we do continue to see the effects of climate change. In 2024 alone, we paid 750 million rand worth of weather-related claims, whether it be from flooding, windstorm, severe convection storm, pretty much across the country, floods in KZN, in Western Cape, and also into Gauteng. And so this remains a critical theme for insurance, not just locally, but also internationally. And so that does increase the cost of property claims. And within the motor sector, the motor value chain itself is under tremendous pressure. And so again, that's pushing up the cost of repair of motor vehicles above the cost of inflation. You did mention that CPI inflation is much lower in 2024, but the cost of repair of motor vehicle is much higher than CPI. And so we continue to work with the various stakeholders in the motor value chain to lower that cost. Ultimately, that needs to be borne by the end customers.
Yes, and very quickly, Mr. Madzinga, what are your confidence levels about South Africa as an operating environment for the rest of 2025? Every now and again, we see a bit of a wobble in the GNU, which of course has been responsible for the spur that we've seen in positive business sentiment.
I think on a relative basis, I think you see what's happening in the rest of the world. I think South Africa, for us, is our core dominant market. We have optimism in what we're seeing in this environment. I think coming out of 2024, inflation where it is, interest rates coming down, motor vehicle sales starting to pick up gives us some optimism into 2025. But I think further than that, if you look at some of the initiatives that we as a business community are driving, working together with government, particularly on some of the really difficult, structural issues that constrain economic growth, such as rail and transport, the creation of employment, I think we are seeing, tremendous progress working with government on driving some of those difficult areas. And so I think longer term, it does give us some optimism that we will see economic growth pick up in 2025 over 2024.
All right. Thank you so much for speaking to us today. That was Tava-Ziva Madzinga. He's the CEO of the Santam Group.